Welcome everybody to BQuest Happy Hour. Super excited. This has been a lot of fun. It's been growing. We do appreciate those who reach out and give us some ideas with questions that you may have. And we'd love to go ahead and just obviously take care of our investors any way we can. And if we can offer some education and reach out and find resources for everybody, it's fun for all of us. We all like to learn, right? So today we are going to have our very own Cole Gillette go ahead and cover for us using AI to research closed-end funds and fixed income strategies. We do have a few people on here. I recognize some names of people on here who might have some knowledge in this space. So don't be afraid to hop in and share some insight from your foxhole, your experience. We also have Jan, we'll introduce at one point too, who's on here, who definitely likes to come hang out with the BQuest team a lot, and we all learn from each other. So Cole, if you could introduce a little more about yourself, that'd be great.
Yeah. So, hello everyone. Good to see you guys again. If you weren't here last month when I jumped in and did some AI for investing in real estate, I'm Cole. I'm new to BQuest. I've been here for 2 months now. I'm the AI implementation specialist. I do some financial analytics as well. Currently, just started my senior year at University of Tampa. I'm studying finance and economics. But yeah, definitely focusing on AI and the cutting edge of technology, especially with consumer technology and applying those skills to investing. So today we're going to talk about specifically closed-end funds and fixed income strategies. Yeah, I mean, I'm good to start. Jan, if you want to jump in at any point, if you want to introduce yourself before we get started, I'm good with that either. But the basis for this happy hour is it's very open ended, right? So if anyone wants to jump in, has questions, or wants to provide more context on the AI side or the investing side, please do. I'm definitely young. I know a lot about AI and tech and stuff like that, but it's good. It would definitely be good to hear from the rest of you regarding investing. And I think Jan has a bunch of experience and knowledge in the space. So Jan, if you want to introduce yourself, you can take over.
Sure. Hi, my name is Jan Naismith. I've been doing all kinds of stuff in the financial industry for 35 plus years. That includes in currently owning an index provider. It's highly rated on Bloomberg or tracked by Bloomberg. Ran a large organization of financial advisors that are tactical. Had two different RIAs. Currently run a mutual fund. Ran a currency, the first global currency mutual fund, blah blah blah, a lot of stuff, and have a lot of experience in trading closed-end funds and assets of that sort. So that's pretty much it in a nutshell, right there.
Very cool. Very nice, Jan. Your experience is definitely very valuable. Yeah, so please jump in specifically on the next slide when I'm going to talk about analytics and get into the numbers a little bit more. But if I could direct your attention to the image on the right side, just so everybody can get some context about this whole AI boom, what's going on in the tech market nowadays. So if you refer to the right side, you can kind of see, cloud and foundation model platforms. Everybody knows Microsoft, Amazon, Google, IBM, right? So under them is the CPU providers that provide the computing power for those software engines to run. So you'd see NVIDIA, which most people are very familiar with, considering its returns for the past 2 years. Intel, Qualcomm, AMD, probably all familiar with, but these are the actual companies that are manufacturing the hardware for these software engines. And then finally, at the bottom, you have these different AI companies, right? So everybody's familiar with OpenAI. They run ChatGPT. I'm a big fan of Anthropic. They run Claude. Claude is great for being a coding assistant, right? I have no software engineering background, but I use Claude to code different dashboards. You can give website designs, any of the above, digital necessities that you might need. So overall, all those AI companies are at the bottom and need those two layers of infrastructure to run well to actually provide a large language model as a product to the consumer. So on the left side, you can see some of the different companies that focus on AI for research, and these can definitely be used for closed-end funds or any kind of research. So AlphaSense, which will be referenced throughout the slides, is an enterprise-grade access to news, filings, and transcripts with a generative AI summary. Right. So essentially, it's all things Bloomberg, all things Wall Street Journal, all put into one platform. And that's kind of the idea of it, is that you're getting all your news and data in one spot so that you don't have to use multiple sources. Now, Reflexivity is pretty similar. It's an institutional AI platform trained solely on verified financial sources. So if you're looking for, document intelligence, quantitative insights, multi-source synthesis, anything at that institutional level, you definitely want to go with Reflexivity. And then finally, Invest LM is the finance-specific large language model with strong comprehension of SEC, CFA content, and financial analysis. So all three of these are specialized for its intended use, but put together, all three of them, you have essentially an AI assistant, AI agent as an investor, right? Instead of needing a consultant, you can do it all from technology with verified sources for data, filings, everything that I just mentioned. So that's kind of the real use case of some of these different specialized AIs, right? Is that you can monetize your own investments just by either using the free version or paying a monthly subscription for that premium access to some of these large language models, which, at the end of the day, will help you get higher returns. Obviously, no guarantees in finance and investing, but we can all get as much technological help as we can get. Yeah, Sean, you can go to the next slide. I'm good with this one, I think. Any questions at this point? Would anyone want to jump in, talk about AI or what they use to research for investing? If it's Bloomberg or typical Wall Street Journal, anyone have anything?
Cole, I think you're the one that's the expert here on AI for sure. There's some other sources that are really good there on this slide.
Yeah. So I'll jump into this then. So I'm only going to talk about two here that are, specifically for the secondary market or closed-end funds, and it's Overbond and CEF Connect, closed-end funds connect. So I'll start with Overbond. It's specifically AI-driven analytics and smart order routing for bond markets. So it uses automated credit and liquidity scoring as predictive price models, modeling in underwriting and secondary bond automation. So, if you want to compare and contrast the highest performing bonds as well as versus the highest risk bonds, something like Overbond would be able to do this very easily. Looks like we have a question in the chat. Does AlphaSense have a free use version like Claude and ChatGPT? I'm not 100% sure on the specifics of that, but I believe with a lot of these finance specific, investing specific AIs, is that they will offer a free trial. And if they're not institution specific or enterprise specific, right? Like a lot of like ChatGPT has an enterprise option that you can incorporate into your business. I'm not too familiar with AlphaSense specifically, but they're typically you can get a free trial if there's not a free version already available. But once again, it is the free market, and these companies need to make money. So most of the time, there's going to be a subscription model, whether it's monthly or annually, that is going to be required for full access of these resources. Yeah. So Overbond, I would say the key feature with Overbond is real-time liquidity assessment across all bond markets, right? So it can be corporate, government, doesn't matter. They will analyze all of them and give you the best recommendations on risk and yield as well. So, Jan, do you want to jump in, or do you want to talk about Ceph Connect, or you want me to go over the overview and you can jump in after?
Oh, I can jump in real quick. I mean,
Yeah, of course.
CEF Connect, CEF Connect, that's been around for quite some time. I remember using it quite a bit, and it's come a long way in terms of its filtering. First time I started using that was I was pretty lucky, and I exited the markets, the equity markets early 2000, actually mid year 2000, after we had the first uh, the first just warning, if you will, from the tops of March, and luckily really cashed out. And then I started really paying attention to CEF Connect, and the reason is because at that point in time we were sitting in a lot of cash. This was an existing RIA I had was part of back then, helped start it, still around, but with my former partner. But anyway, we really started cherry picking the different types of issuances that are out there, and CEFs are basically funds that have finite amount of assets in them. They trade like a stock, and therefore they move quite a bit differently than an ETF because ETFs have creation units and redemption units, and therefore keeps the flow of assets stabilized. So when you're on CEF Connect, you really have to pay attention to not only what the AUM of the item is, but also take a look at the spread if you are using a trading apparatus such as a brokerage or maybe a trade station or interactive broker or something of that nature, because it can get kind of quirky if you try to buy too much of one CEF at any given time if it doesn't have the volume to support it. Another thing is that a lot of people really pay attention to premium and discount. um, I don't get fooled on discount too much because if you can go back and look at the discount premium history, and you'll find several CEFs that look like a great deal at this point in time, or maybe in the past, but they never were able to really jump out of their discount mode into a par mode or even a premium mode. So there's some that travel around discount and premium. A lot of times those are great while you're looking for yield and also enhance the yield of your portfolio, and also finding really deep discounts. So if we have another, or when we have another market correction, that same tool is still available now. It's just more emphasized through the use of AI. It's the same principles I've been using for 30 years. And the idea is that you want to buy items at a discount that are not permanently discounted. Grab the shares as you can grab them. Do not move the needle if you want to gather shares. I remember, and I'll finish up real fast, but I remember in 2001 through 2002, we were picking up items that were 15 to 20% discounted. Most of them were in the municipal bond area, although we were trading some ETG, those are the tickers, ETO, things of that nature, and paying out 7 to 10% on the yield. So again, 15 to 20% discount, paying out 7 to 10% on the yield, which is incredible value at that point in time. And I think that when markets start settling down here, reverse, we'll have that option again.
Yeah. Wow. Thank you, Jan. I really enjoyed your insights and definitely your expertise. I do have a follow-up question though for people that are also, into the numbers and the analytics as I am for researching investments. Can you dive into a little bit? I mean, maybe not necessarily the premium discount aspect, but just net asset value as a whole, NAV versus MNAV, the equity multiplier net asset value, and why those are important for fixed income investing as well as closed end funds as well.
Cole, I'm sorry. Were you asking me because we had a lightning bolt just hit close by and we
Oh,
lost some of our power here.
oh,
So
interesting.
I only captured part of what you're asking there, but if there's someone else on that heard the whole thing, that'd be great.
Yeah, yeah. I mean, I can fill in, but anyone can jump in at any point. I just wanted some further, explanation into NAV, net asset value, and equity multiplier NAV, the MNAV statistic, and obviously every people know that those are important for valuing equities or stocks, but what makes it so important for bonds and fixed income investing?
Well, in this day and age, and again, I have two different bond indexes that are highly rated. We don't actively signal out CEFs to institutions because they're just way too large to trade them. But from there's one other thing that I didn't mention before, and that is sometimes you have the influence of the leverage on these items. So that some of these items are levered, and what may appear to be NAV may not be correct simply because of the leveraging effect. So when you have changes in these markets, if you are carrying more leverage, some of these CEFs carry 30, 40% leverage. In my case, from the mathematical standpoint, when I'm looking at CEFs, I like to do low leverage because or no leverage because what you're receiving is what is being dictated by the premium slash discount methodology to whatever the underlying assets are. So, I'm not completely addressing your question because I see it through different eyeballs,
Right.
but the idea is that you have to factor in all risk into these items because again, the more thinly traded they are, you can have a major league drawdown in a CEF if you're not doing your homework correctly in terms of both the size, the volume, leverage calculations into the value of the CEF itself. So and premium discount, of course. So that's about all I have to say on that one.
Yeah, no, I really like that answer just because it goes more in depth and not just looking at net asset value as face value and understanding the risks of the underlying asset and whether the issuer has extra leverage or not. That's not always stated in those statistics. So I definitely appreciate that perspective. Does anyone
Well,
else have anything to add before I add
well,
on? Jan?
one thing, Cole, the cool thing on CEF though, Connect, and I'm going back to that,
Yeah, yeah.
is that it does give a current leverage amount. So leverage tends to become more dangerous in markets that have run for a while. These things, they trade again like equities more so than they do a, like a bond type of instrument. And so you have to treat them as such because a lot of times the bid will completely fall out from under, almost like a flash crash during periods of time of major league movement and volatility in the markets. So you have to be careful with that.
Yes, definitely got to be careful with leverage, especially in the uncertainty of the macroeconomics of our market, the current market conditions. But yes, definitely a good lesson to learn as a whole and perspective to have when it comes to investing in any asset. But yeah, Sean, you can go on to the next slide whenever you're ready. Thank you. Okay, so this one is kind of just going to summarize the entire process from data to investment decisions. Right. So, for example, you start with your data integration and ingestion. So, like, you pull from CEF Connect, the NAV returns, discount premium, all your sources, the different credit models you use. You take, and then you take AlphaSense, you pull that data from CEF, you put it into AlphaSense, Reflexity, or InvestLM, and, it updates the latest filings, news events, and transcript analysis for that specific data. And then it spits out a predictive model for whatever analytics you are looking for. So it can be customizable depending on the asset class. So language model classifiers score funds on expected risk adjusted yield. So anomaly detection for large discount funds. All that means is the scores that are pushed out from these predictive models are based on risk adjusted yield. So getting you the highest yield for the lowest risk. Um, Additionally, you will be able to filter for the highest yield or the lowest risk independently from each other if that's what you are looking for. So the dashboard output will be an interactive scatter plot of funds, discount versus predicted return, and you can filter by fund type, yield source, liquidity, all of your favorite metrics. But at the end of the day, it's important to remember that these models are not making investment decisions for you, right? They're not conducting the trades through your brokerage. They're just giving analysis and advice based on purely statistics, right? And so that's what that dashboard output is, right? That interactive scatter plot comparing and contrasting these different funds based on discount, predicted return, as well as anomalies for large discount funds or high, large premiums, as well as extremely low returns that might be at a discount as well. So, the image at the top kind of gives you the workflow model of how these LMs work and essentially how you can apply them to your investment decisions as well. Does anyone want to jump in and add? Maybe they've had experience using AI for investing or for research analytics, or even if anyone wants to talk about their traditional way of doing investment research, whether they have an advisor and are thinking about incorporating AI. If anyone wants to jump in, I'd love to hear from other people as well. No, that's all good. Sean, you can go on the next slide.
I will ask a question. My
Yeah, of
name's
course.
Berta. First time on a Bequest event. So I'm just curious. I come from the alternative investment space, like self-directed IRA.
Okay.
This seems very geared towards people who are doing a lot of analysis or deep dive into a portfolio that they maybe have with their advisor. Is that correct? And or a way to analyze funds with bequest. Like I'm trying to understand the approach. Like is everybody on this call like, I don't know.
If you don't mind, Roberta, I'll jump in. This is
Okay.
Sean. Yeah, this is Sean with Bequest Funds.
Hey,
So what we have is we actually have we have a lot of events that we do, and most are we're geared specifically towards the assets type that we invest in. We have about 100,000 people or so in our sphere amongst investors and people who follow us, and quite a few are asking, can we do some happy hours on other types of investments? So
okay.
what we've done is we've covered real estate and different asset classes and real estate using AI, fix and flips with cash flow. And then this is specifically towards somebody who is wanting to control their own portfolio
Got
and
it.
using some AI to help them do that and analyze. Maybe they're a professional and they're too busy to dive in deep. And so this would allow it to happen a little bit quicker. Or maybe they don't have the capacity or knowledge base and they're able to use and leverage some of these tools.
Got it. So if I wanted to use AI to generate a balanced portfolio with a certain expectation, return, etc., I could use one of these tools and say, here's what I'm looking to achieve with investments correlated to the stock market.
Oh,
Cool.
absolutely. Yeah.
Okay,
Yeah,
Yeah,
yeah.
that's
yeah,
Definitely.
Roberta, this is Jan. Yeah,
oh
those are
yeah.
good questions, and I think that you specifically mentioned self-directed IRAs.
Mhm.
When I was using and have used in the past CEFs, again, you can't bet the farm on these things, but you can definitely supplement additional income. So an IRA wrapper, self-directed or not, is a fantastic tool to use these items because, again, I'll give you a real good example. Back in 2002, 22, 23 years ago, we really hit some huge discounts in the muni space, which it sounds goofy to buy munis in an IRA, but it doesn't really matter if you're just simply trying to gather the yield.
Right.
We were using those in IRAs, which was interesting, but at the same time, we were getting the yield of 7 or 8, which ironically, the munis were pushing out more yield at that point in time than traditional bonds or taxable bonds. And that's the reason why we had to lean in that direction. But it was a great way to capture a lot of yield and at the same time, not having to pay the tax on that. Now, if you find items that are again, energy related or real estate related. A lot of these CEFs are energy, real estate, bonds, and so forth. And I generally recommend waiting until the volatility of the overall market has peaked and starts falling before you really start digging into these things. Um, Simply from experience. But that's also a great time to find the discounts and find the super high yields And maybe if you're trying to invest for half a year or whatever, then it's great. You've done it within an IRA, and there's no tax implications.
Okay, great. I'm understanding now. Thank you.
Yeah, those were great questions. And all I was gonna say is, just to add some context, at BQuest, I'm, using AI tools to analyze our own portfolios and, look at different investment strategies based on what we have at the company outside of, independently what I do for my own investment research. So, the point is it can be applicable at the individual level or at the enterprise level, right? So, yeah, definitely something to consider to add to your arsenal of skills, to put plainly. But one of these last slides here is kind of a case study of what this would look like for a manager trying to balance assets, as Roberto was just mentioning about diversification. So one of the points that is mentioned here is the AI powered approach, right? So through AlphaSense. Um, identified sentiment shifts in the credit markets. So essentially, what the AI did was identified 8 undervalue closed-end funds with strong NAV stability and achieved 120 basis points of alpha versus the traditional benchmark, which is solid. Um, over an annual period of time, and I wish it really played out a longer period, like a 5 or 10 year, but even still, just the ability to recognize when something is undervalued is a extremely important technology to lean on, especially when it comes to investing research. So yeah, so over time, reduced analysis time is 65% compared to traditional methods, right? So if you're going to go through manually your Bloomberg terminal, your Wall Street Journal articles, your typical investing research analysis, it would take you, it take you basically triple the time to do it manually than to have an AI assistant help you and directly point out the tickers that are undervalued. Um, so the breakdown can kind of be seen on the right side, the different bonds by jurisdictions, municipalities, and the weighting percentages, which are in really small font. I know you guys can't really see that, but yeah, the overall gist of the case study is to show that AI can help you and is being used already, um, by, if you want to think about it, as competitors in the marketplace, or just everyday individual retail investors to help them get an edge on the market. Um, yeah, I think yeah, like I said earlier, it's definitely an important tool to add to your arsenal. Sean, if you want to slide to the last slide, and I'll open it up for questions, comments, other, AI general questions, investing generalized questions for Jan. I think some of these are just, key takeaways and things to implement in your everyday life, even if you're not looking to invest in fixed income or closed-end funds specifically. Anything can be this, as I spoke about last month. This can definitely be done with real estate investing, as well as your typical equity markets. I'm big into Bitcoin, so I use this a lot for cryptocurrency analysis, derivatives, and quantitative analysis. So yeah, with that being said, I'll open it up to anyone else if they have questions or comments about AI or investing.
Yeah, cool. Actually, I'll jump in. So I know that a great question from Verta, and I think quite a few people, about a third of our investors use their self-directed IRA actually, because they're looking for something that's more consistent, predictable, and fixed, right? They don't want to worry about the volatility of an IRA as they get later in their years, closer to retirement. So they're not really looking for double-digit returns. They're looking for a nice, consistent, higher single-digit return. So with the closed-end funds options, what type of, I guess you would say, time frames are we looking once you've decided where you're going to go, where you're going to deploy your capital? How often should somebody really be checking in? Is it just a daily thing they have to watch, or are they able to periodic? check in and see how things are going with the fund, make adjustments to their different deployments.
Yeah, I mean, it's definitely a longer term strategy, specifically with any equity or bond that's fixed income, has a fixed income yield. But for specifics, I'll let Jan answer that. You know, he's got 20, 25 years of experience managing a fund. So, Jan, if you want to jump in and talk about, you know, some of the more specifics and, you know, even suggestions for self-directed IRAs.
Sure. And by the way, if anyone wants to contact Sean to get to me, I'm at the bequest office regularly. I do not actually, I'm not actually an employer of bequest. We do have a joint, and all in full disclosure, we do have a joint uh, um, venture in a hedge fund that I manage. It's Algo IQ Capital. And then I also am a huge fan of some of the bequest products that I'm actually trying to get placed in the different mutual funds around the U.S. So there's definitely some some co projects that we're working on that's pretty cool. But from an advisory standpoint, God, I've been an investment advisor since 1991, so quite a long time. If anyone wants to contact Sean about general questions with this kind of stuff or other questions about other things, I'm certainly available. And it's on the house, as they say. We're just trying to, again, get more information out there for other tools that you can use besides the ones you're working with now, or perhaps work with bequests or whatever. But anyway, um, Cole, the main thing I'm looking for with CEF is in terms of checking. It really depends on the market. So as an example, if a CEF is deeply discounted, a lot of times it'll take quite a bit of time to work its way out of that deep discount. And so normally what I would do when I was using these quite a bit more in the past, I haven't used them in a bit, but I think that the market is such that, they're going to have tremendous value here in the future, is just simply look at, we literally had 25, 30 different investments in CEFs, different amounts. Back then, they weren't as big as they are now. So there's a little bit more flexibility in terms of the amount that you can use and the amount that you can put in these. But I always paid attention to the past discount premium behavior and compared the current behavior. So as an example, if there was a new Veen fund or something of that nature, which I think actually used to own CEF Connect, um, if I saw one that was paying out 10% tax free, discounted 15%, but historically was carrying a discount of say 3 to 4%, and rarely going into the premium space with a lesser amount of yield at that time, because you can track both yield and historical premium discount, which is cool. um, you have to look at really relative to the behavior of that particular ticker that you're looking at, and also look and see what's going on with current interest rates. Both long term, short term. The spectrum of interest rates across durations, and that way you can make an informed decision. So, as an example, let's fast forward. We have this 40% correction that everybody thinks will never happen, but I guarantee it will happen sometime in the future. And all of a sudden, the dust has settled a little bit. A lot of these things have gotten smashed up on their discounts, and you decide to start putting some toes in the water. And you found a beautiful one that's discounted 15%, it's paying out 8%, whatever your numbers you're looking for. But the markets are changing, they're bouncing off, and they're starting to improve again. As they're improving, what's happening? The discount normally is going to start narrowing. The yields normally will start coming down. And the idea is that you're trying to not catch the bottom. That's impossible with virtually everything. But what you're trying to do is get in at a point in time when overall market volatility has really started to wane. And then once that discount has started narrowing to its historical norm compared to being way below its historical norm, that'd be the time to start the exit process and perhaps look at other items that are candidates at that point in time. So that's just a kind of a real life way of doing it. It was insane because back in 22, gosh, we're pulling in 25-30% on tax-free muni CEFs, and that's just insane. So, but that doesn't mean it can't happen again.
Yeah, definitely. I appreciate that insight, especially the 40% drawdown part and the possible brighter outlook for the future in terms of returns as well. Post that possible black swan event, or market conditions that might not be favorable for the typical investor. But yeah, I'll hand it over to Sean. Do you have anything else you want to add?
No, thank you very much. I'll admit this is a space, and I'm glad Cole was able to step in and cover it. And thank you very much, Jan, for jumping in with all your experience. We meet a lot of people like Jan through our various investment groups we've had in the past and clubs, and it's really great when people get brought together that just enjoy helping each other and seeing success with each other. So
Well, that's
we're
that's how our
excited with that.
relationship began. That was kind of cool because I came to a cryptocurrency. I was actually running a cryptocurrency signaling business, and that's how I met Bequest. They were having a workshop slash happy hour, and so they have attracted a lot of talent from all around the United States. So it is pretty cool. Definitely. Thanks.
Yeah, thank you, thank you. And definitely want to let everybody know if you have any insight or questions or ideas for happy hours, we're definitely taking that, and then we'll get with the team to figure out who's going to be best to run that. We have a few options for our next one. We're seeing if there's a certain speaker that we can get. If not, then obviously we'll have to adjust. We do enjoy doing these. We think it's a good time of day to do it, at least for the East Coast before everybody starts deucing out for 5 o'clock. And then it's still late enough in the day where the West Coast can get on, and all our investors from Hawaii too. We do offer this out every time, and quite a few of these tools have been used by most of our investors. These are individual tools that our team members have worked on to build for our investors, our investor community, and now we offer these out to you during our happy hour. If you ever have any questions, you start playing with one and you like it and you want to know what more you can do with it, or you don't totally understand it. Some people think the only time to run a SWOT analysis is right before you get a business loan. However, anybody who owns a business should know that you should be doing that at least once a quarter minimum. But to be able to run one within seconds using AI to help you do it is pretty neat. Also, we can either get these books to you digitally or mail them out to you. It's our pleasure to do that. Most people actually on this call that I'm looking at, I recognize who you are, and you probably have most of these tools. So feel free to share this with any of your friends and family. We've had a tremendous amount of growth this year with us stepping in and bringing on non-accredited investors to go into similar asset classes. Obviously, a little lower returns due to the fact that to pay a broker dealer in there. However, they're able to get these, your capital backed by true assets, which is a lot of fun. Any questions, please feel free to reach out to me. I think everybody on here actually has my information. Thank you very much, Cole. He's in his senior year of college, and I'm pretty sure he'll be running a fund in the future. And he's learned quite a bit here really quick. He can basically take that fire hose of knowledge and use some AI to help him gather a little bit faster. So he's done a great job. He's impressed us all the whole time he was here, and we're excited to have you around, Cole. So anybody else have
Thank you.
any more questions? Thank you very much, everybody. Cole's LinkedIn is in the chat area. If you'd like to go and connect with them, I believe somebody else dropped theirs too. Grover dropped his also. So if y'all have any questions or want to connect with anybody here, we appreciate it. We all love to learn together and continue to earn together. Y'all take care and have an amazing day. Take care.
Thanks, guys.